Mahanagar Gas, it ceases to be out of news. It's not had a very good year. The city gas distributor shares have been badgered in trade, correcting nearly 20% this year. But is the fall warranted? Well, you could argue it is because there were technical triggers in place. The question mark is, post the fall, does the stock offer value to investors? Soumeet Sarkar has done an analysis, and I'm sure he's spoken to experts as well to try and figure out if there's value here. Soumeet, good morning. What do you have for us?
So if you see the share prices of Mahanagar Gas, from its 52-week high, it's down more than 30%. Year to date, it has fallen more than 20%. And this is despite the fact that it is the most profitable listed city gas distribution company and is also the most preferred bet in the city gas space. More than 71% of the analysts tracking this company have a buy rating on the stock. So we have tried to analyze the possible concerns or the overhang on the stock and what are related to the stock. So first, and the very important one, it is that one of its promoters, that is the Royal Dutch Shell Group company, that is BG Asia Pacific, has been selling stake in the company. Now they are doing it because of the stated global goal of investing more in upstream businesses. So far the promoter has sold close to 22.5% stake in two different transactions, and in both these transactions the promoter had offloaded stake at a significant discount to the prevailing market price at that time. So this has been an overhang on the stock. But the international partners selling stake would not matter the company much because the day-to-day operations of the company are managed by GAIL, that is the second promoter of the company. Also, Shell now only has 10% stake remaining in the company, which it will be looking to sell, but cannot do it till July 1st, 2019 because of the SEBI listing regulation. Now, the second concern is that the company did not receive any letter of intent for any of the areas that it had placed bid in the 9th round of city gas auction. So investors are worried that this might limit the company's growth potential going forward. The third is the rupee depreciation. As the company purchases gas using dollar, a depreciating rupee means that they need to pay more for this for this gas purchased. And this, coupled with the rising gas prices, has been the fourth concern, as it could limit the company's ability to maintain margins going forward. But if you see over the last 2 years, despite these two concerns, the company has been able to maintain its margins. Its EBITDA per standard cubic meter, that is the unit margin, it has been steadily rising. It has increased from 6.7 rupees to 8.1 rupees, and there have been one-offs in this, but that was due to delay in price hikes. But over a longer period of time, if you see, they have more or less maintained their margins. In fact, it has increased from 6.7 in first quarter of financial year 2017. It has now increased to 8.1 rupees in the first quarter of financial year 2019. Now the company has a pricing power in the market, and that is because the prices of the alternative fuels, that is petrol, diesel, or the liquefied petroleum gases, now they are at a premium of around 30 to 40%. And because of this pricing power, the company has the ability to take price hikes and pass on the cost to the customers and thereby maintain its margin. Now on the growth concerns, if you see over the last 2 years, the company's sales volume per day has been steadily increasing. It has increased from 2.5 million metric standard cubic meter per day to 2.87. Moreover, the natural gas penetration in Maharashtra is just 30%, and the company has a monopoly status in areas like Mumbai, Thane and Raigad. Along with this, the government has also been pushing towards increasing the gas usage in the energy mix. So all this combined, the growth potential of the company going forward is very huge. Now obviously winning a city gas area would further increase this growth potential, but not winning one does not limit its growth potential. Lastly, if you see why it is the most preferred bet. Now, one, it is the most profitable city gas distribution company among the three listed peers, that is among the two listed peers, that is IGL, Indraprastha Gas and Gujarat Gas. And second is it is the cheapest city gas distribution company among the lot, be it FY19 valuations or the FY20 valuations or any different valuation metric, that is price to earnings, price to book, or the enterprise value to EBITDA. On all the three valuation metrics, the stock is trading at a discount of nearly 20% to its peers, be it FY19 and FY20, and that's the reason there could be some value in buying this stock.
And the growth numbers look okay.
Growth numbers in the last 2 years look okay, and given the growth potential in the existing areas of the company, the volumes are expected to rise, and the margins have more or less remained stable. So the only overhang on the stock is that the promoter that has been selling stake at a discount.
Interesting. Soumeet, thanks for putting that into perspective. So, well, I reckon the technical triggers essentially leading to the stock underperforming big time in the current calendar. Let's see if that changes, maybe once the overhang of the extra selling goes away. Thanks, Soumeet, for putting that into perspective.